What's up everyone, it's Scotty with Money Investing. In this video, we are going to be talking about Target, ticker symbol TGT, and they are going to be reporting their numbers next week on May 17th before the markets open. So before pre-market, so is when they're going to report their numbers. So this is going to be a quantitative analysis. I'm going to break down everything you need to know about Target's earnings, revenues, cash flows, valuation, profitability margins, and of course talk a little bit about the intrinsic value, the calculation for Target as well. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And there is going to be that link for our Discord and Patreon down below if you want to join. Of course, be a part of our money investing community. 16% discount that's available on an annual basis. So link's going to be down below. So first things first, let's just go over the earnings expectations. So EPS is going to be pegged at a little bit over $1.80 per share, and revenue coming in at just over $25 billion. And we have seen over 21 downgrades in the last 90 days, so we have seen a little bit of a revision to the downside. I have done videos on Target before, and you'll notice that back in 2022, because of the increase in inventories and a little bit of a shift in the overall inventory levels, we did see Target drop over 29% that week once they reported their numbers. And since then, they haven't really been able to recover all that much. So they are still down from their all-time highs, a little bit over 39, close to 40%. And year to date, they are very flat, up just over 5.3%. And they do give you a dividend yield of just over 2.7%, trading at just a little bit under $158 per share. So going over to the financials, it's not to mention, it's got great financials in terms of the revenue growth. It's been pretty consistent and consistently growing. So you can see that they have grown from about $72 billion to over $107 billion. One of the largest retailers in the US, of course, compared to Walmart as well. Walmart's at a whole different level. Next is Target, of course. And gross profit also profitable on a gross basis from $21.2 billion to almost $27 billion. So very stable, very consistent. It is a little bit of a value stock, right? Not really a growth company, so to speak, but the earnings are expected to grow pretty rapidly here over the coming years. Operating income also going from just under $5 billion to a little bit under $4 billion. They have been consistently growing, of course, up until last year. We had a very substantial growth, but in 2023, 2022, we have seen a lot of discounted sales because of the over inventory levels for Target, and as a result, the operating income definitely took a bit of a hit, and because of the shift in spending as well. Technology and electronics, they were not being spent as much as groceries and some of the food and perishable items. They have lower margins on those things as opposed to technology and electronics, which are obviously higher margin items. So a little bit of that shift obviously causing some margins to compress for the company. Net income over here has also pulled back to under $3 billion, but last year it was almost $7 billion. And of course, diluted shares outstanding consistently going down. So the company is doing a really good job in buying back the shares. Every single year, they've gone from 641 million down to now under 470 million shares outstanding. When it comes to profitability, you can see that the margins have compressed a little bit, so they have come down. Their 5-year margins for the net income, 33%. Now it's down to 23%. And the gross profit margin, also the 5-year average, 28%. Last year was just under 25%. So we are seeing a little bit of a pullback, and efficiency-wise, the company's okay. Return on capital, assets, and equity is somewhat decent at over 5 to 8%. Return on common equity is definitely very high at over 23%, but still lower compared to the 5-year average of 33%. When it comes to the actual balance sheet, so if you come down to the peers and scroll all the way at the bottom, you'll notice that the total cash on the balance sheet is just over $2.2 billion, with the debt sitting at almost $19 billion. So they've got a positive net debt, so debt's almost at $17 billion on a net basis, which obviously is not something that I'm super pleased with. And current ratio is a little bit under 1, and quick ratio is really terrible, which really goes to show that the company has a lot of inventory, right? I mean, if you take inventory out, then the quick ratio is at 0.2. So current ratio 0.9, even that is not great, right? So a company is still sitting on a ton of inventory. If you come over to financials and balance sheet and scroll down a little bit, you will notice that the inventory has only been increasing. So this right here is the level at almost 13.5. It's pretty much at an all-time high right now, almost close to $14 billion right now is what the inventory levels are for the company. Now, in terms of valuations, we are trading at somewhat reasonably high at over 18 times earnings on a forward basis. Price to sales is almost always low for these types of companies because right now the market cap is about 72 billion and it's doing a little bit over 109 billion, so it's less than 1 price to sales. So they're always really, really low for these retailers. Enterprise value to EBITDA over 13 to 11 times, not bad. And price to cash flow at a little bit over 9 on a forward basis. So price to earnings multiple still a little bit on the higher end. Now, in terms of earnings estimates, right, when it comes to forecast, they are expected to increase that number to $8.47 for the entire fiscal year 24. And that number is expected to grow all the way up to $17, all the way up to $26 by 2033. So if you plug in those numbers here, the same numbers that the analysts are projecting for, Target's expected to grow EPS by over 15% on a compounded annual basis and 13% on a compounded annual basis over the next 9 years. So 9 years, 5 years, the growth rates at 13%, 15% respectively. This right here is the share buyback by about 3% every single year. So if you plug in some of those numbers, the share count right now for Target, if you come down all the way, that's sitting at around 464.7. So we're going to plug that number in, 464.7. And the actual net income, they're expecting at over $8.47. So let's just do 6500. Let's just do 6 billion. Or let's just come down to 5 billion. 10. Let's just do 45. So 4,200, 4,000. I think $4 billion is going to be that number. There we go. So 847. We can come down a little bit more, 3950. And there we go, 850. So $8.50, 2023 net income. Share count 464 million. And we're looking at an EPS of $8.50. Now, when it comes to future growth, I'm not going to go with 13 or 15%. Let's just go with something modest at 12% growth for the company. P multiple, I'm not going to go with 18. Let's just try 16 here. Discount rate can be a little bit lower, closer to 9%, because they do pay you a dividend yield of close to 3%, 10% margin of safety, and we're looking at a fair value for Target at 163, and they're right now trading at 157.99. So they're actually very close to the intrinsic value. Could be even argued that they are a bit undervalued. But I'm kind of skeptical about that growth rate. Like, how is Target going to grow at 12% over the next 5 years? I mean, that's even on the conservative end. How are analysts pricing in a 13 to 15% growth here for Target over the next 5 years? So that is a little bit not really concerning, but really questionable. How is that growth going to really come from? I mean, if you come over to the sensitivity grid, you can see that if you go with a little bit of a lower growth rate, let's say 10% and 14 times P multiple, then we end up at close to $130. And 9% discount rate, I think, is reasonable because the company is paying a pretty decent dividend of close to 2.7%. So yeah, that's going to be the sensitivity grid. I might have to go a little bit lower just because I'm not super convinced with a 12% growth rate. Like, where is that growth going to come from is the real question. And again, lower P multiples for these retailers I think are appropriate at the moment. Now, in terms of technicals, this right here is going to be the analysis. We have been consolidating sideways for some time, so $179 close to $180 is going to be that resistance for Target. Every single time we get up to that level, we get rejected, we get sold right back down. Support level is going to stay put at 138 close to $139 per share. So that right there is pretty much the range or consolidation within which we've been trading at. And I think the big key items for this earnings are going to be that spending shift. Where are consumers spending more money? Is it electronics, devices, technology, or is it still groceries, perishable items, some of those things? And of course, inventory levels are going to be very important. I'm still not super happy with the balance sheet that the company has. Lots of debt with little to no cash, and of course, current quick ratio are very poor. And then also the growth rate, I think, is going to be very questionable for 12% for Target. Let me know in the comment section down below, what do you think about this company? I would be interested in Target, maybe sub 125, closer to $100. The more undervalued it becomes, the better I think it'll be from a more value proposition standpoint, because it does offer a pretty decent yield. So let me know in the comment section down below, what do you think about Target? And as always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.